Life, it is said, is the art of drawing without an eraser. Squiggles, stocks, serendipity, and more with Fidelity's Bill Kennedy. Bill, welcome back to the show.
Thank you.
A book that's widely famous in India is Peter Lynch's One Up on Wall Street. And he said, never invest in a stock that you can't explain to a kid with a crayon.
Exactly.
What is your investment philosophy? How would you explain your investment philosophy to your 4 children?
It's very simple like that. I look for companies with big addressable markets in front of them, where I can understand a market, how it's going to develop over the next 3, 5, and hopefully 7, 10 years.
And just to interrupt, do you take that cue from how, say, the mortgage market developed in America or how the automobile market developed in Japan?
Yeah, but
so you have a reference point.
You have reference points, but you have to adopt it because each country is different and each point in time is different. So you can't necessarily say, well, it happened in America in the 80s, so it's going to happen in India today. Because
that's too simplistic.
That's too simplistic. But you can try to draw parallels, and you can try to analyze it with a given visiting companies and all of that to try to put it in a cultural and a current context. But I look for big total addressable markets. And then the second thing I look for is a good management team that can take advantage of that. Clearly, I travel a lot. About half of my time is spent on the road. This was pre-COVID, and now we're back, out of COVID, and I'm just been on the road now. I've been on the road most of the year, and I still have travel plans through basically the middle of March. Visiting management teams are really important to me, and understanding is this the right team on the field to take advantage of that total addressable market?
Everyone says management, but how does Bill Kennedy gauge management?
You spend a lot of time with them. And you get to know them over a long period of time. If you look at my top 10 holdings, I have had those top 10 holdings for a long period of time, and I've known the management teams for, chances are I've owned the management teams for over 20 years.
So you look at what they promise versus what they've delivered. Is that your test?
Promise and what they deliver, and very critical in terms of how they allocate capital. There's a book called The Outsiders by Thorndike, who wrote a book, and he says the best way to measure CEOs is based on their capital allocation decisions. They have COOs running the operations. They have CFOs to keep track of how the books are coming together. They have chief marketing officers to sell the products. The CEOs are responsible for the capital allocation decisions, and the capital allocation decision that's where the buck stops as far as the CEO is concerned. So I look a lot at that and measure them according to that.
And you measure them by the return they're generating?
Return on capital employed.
Return on capital employed, that's
exactly. And lack of dilutive acquisitions.
Right, which is, of course, the bane sometimes of the top of a bull market.
Exactly.
So there are a lot of ratios that people use, P ratio, return on equity, market cap, cash flow. What would be your most important? Is it return on capital only?
It's return on capital, free cash flow yield. So investment process, look at total addressable market management. Next thing is valuations. I do a lot of work on valuations, and my kind of go-to metric at the first glance is free cash flow yield. Because what does that do? It's a nice, neat ratio, because it allows you to show efficiency, how much cash are they generating. They may be generating net income, but can they convert that into cash? And it's a nice valuation measure because it takes the enterprise value of the company and also the yield, if you will, that you're getting on that enterprise value. So it's nice and neat and kind of boxed up. I will look at PEs. I will look at other more traditional valuation measures, and I'll see how they are trading over time. But the flaw in that analysis is that this company may be a bit different right now, and therefore it may not warrant looking at it relative to where it has traded in the past.
Right, and that's the one figure that gives you the true measure of management's efficiency.
Yeah. And the other thing is when I look for companies with good balance sheets, and that incorporates, because you're looking at it over the enterprise value, it incorporates the balance sheet as well. So it packages it nicely, the free cash flow yield.
Correct. A man who doesn't love London doesn't love life. I think it's Samuel Johnson. Is that still a good place to watch emerging markets?
It's great, It's because you're right in the middle of it. I have recently moved back to the United States, but I was in London for 15 years. I still keep a home there. And, as I travel, during this period of time, I use it as my base. But it's a great place. When I wake up in the morning, Asia's open. Europe opens very quickly. And then I can, at night, continue to watch the U.S. and LatAm close. It's great. It is. It's really great. And it's a wonderful city to live.
Bill, as a part of the show, we always do a rapid fire. Are you open to a rapid fire round?
Yeah, okay. But of course.
Go ahead, say what you're saying.
But some of the one thing that I've learned, and piece of my investment advice that I've always been given is don't predict the direction of markets. That's always a hard one.
Understood. But we've already made the disclosure that you're a marathon runner, not a sprinter.
Okay.
You have needs to prove it.
All right.
So let's just try that, okay? An Indian promoter that you have admired over the 30 years you're visiting India.
Well, I mean, we use the HDFC example, so I'll be consistent in my thoughts. Deepak Parekh, has been, kind of the guiding light behind the strategy there. So, clearly, just, very admirable individual.
Great. You live in London, you travel the world.
Yep.
3 people you could invite to your house for a drink and dinner. Who would they be, living or dead?
It's a very eclectic group of people. First one would be Ben Franklin.
Really?
Yes.
He's a lovely
human being.
Munger's favorite too, Charlie Munger's.
Oh, yeah. Oh, I did not know that. And I didn't choose him because of that, because I honestly didn't know it. He was a scientist, a tinkerer, an experimenter. He was
statesman, philanthropist.
Yeah, philanthropist, a diplomat. He did a lot of things in a lot of different areas. He had the science part of his brain, the artistic part of his brain, all wrapped up together. He would have made a perfect investor.
Ben Franklin. The other 2?
George Orwell. I mean, you look at his writings, 1984. Look at what's happening in technology. How right was he?
Animal Farm.
Animal Farm. All animals are equal, but other animals are more equal. I mean, how right is that in politics and a lot of things in society today?
Last one.
No, so that to me shows foresight, which is important in investing.
Investing, of course.
And the other one is Harriet Tubman. Harriet Tubman, I've spent a lot of time studying the Civil War in the United States. She ran the Underground Railroad in the United States, helping slaves escape from the South into the North. She was bold. She was dedicated to her cause. She was tough as nails, and she led from the front, which was really important in my mind.
That is an eclectic list. A politician in an emerging market who gets it.
I'll tell you, we're not politicians at Fidelity, so I'm looking for the next Lee Kuan Yew. I really am.
From Singapore.
Yeah, Lee Kuan Yew is, obviously.
They don't make him like him anymore.
They don't make him like him. He was bold, and he took a country, that had a messy divorce from Malaysia, and now look at it.
In a generation changed it.
Exactly.
A great choice. The best investment advice that you've ever received?
Don't fall yourself to thesis creep. Whenever one point in your investment thesis tends to creak a little bit, the others start to fall pretty quickly. I have found that good sellers of stocks, when the thesis changes, tend to be very good investors.
And by that you mean if your investment thesis changes, sell the stock, get out of it?
Yes. The problem we have is when we visit management teams, we tend to really like the management teams. We tend to, in general, have very positive biases towards them, positive feelings towards them. But stories do change. And when they change, you have to be very dogmatic in terms of selling.
The world is getting richer, the world is getting more connected. So over the next 5 years, would you buy luxury goods stocks or semiconductor stocks?
Well, if you look at the midterm, semiconductor stocks had a terrible year last year. And there's lots and lots of demand drivers. Demand drivers from AI, demand drivers from
data centers.
Exactly, data centers, a variety of applications. Where I would argue the stocks have gone down because of cyclical concerns, but the structural drivers have gotten better. That's usually a good risk reward.
So semiconductors. My wife will be disappointed. If I tell you ChatGPT, what do you say?
That's another driver for semiconductors. It's going to revolutionize AI, and you're going to need a lot of semis to do it. I tried to go on. I was telling you last night. I tried to go on and just enter in a few things, and they said, "Sorry, we're at capacity. Come back later." And that means that they need more capacity. That means more servers, more semis to power that.
Which would be a bigger hotspot in the world, Ukraine or the Taiwanese Straits?
That's a political thing. It's too hard to take a view on that.
Above your pay scale.
What's that?
Is it above
my
your pay scale?
Yes.
Okay. Yeah. Would you rather get seats to the Super Bowl game that's this weekend or World Cup football?
Well, I'm a diehard New York Giants fan, and
so baseball.
But the idea being that I root for the team. I root for the New York Giants and the team that's playing the Philadelphia Eagles. So I'd like to go and see the Chiefs beat the Eagles.
Okay. You travel for a living.
Yeah.
I mean, you're out of a suitcase most of the year. Which country would you like to visit as a tourist?
Whenever I get a chance to go on a holiday, I like to come back to India because I've seen India in a lot of professional settings, you stay in a hotel and you visit companies, you go to offices and all of that. And I try to travel in much of India at my leisure. So right before COVID, we went to northern Italy. I took my daughter to northeast India to look at the tree root bridges.
Really? Yes,
yeah,
of course.
which was phenomenal. She's a structural engineer, so she did her senior thesis on that. And that was amazing. And then I've been down to, a couple of years before that, we were down in Kerala, down in the backwater. So my next trip, I want to go up somewhere into Rajasthan and go hiking in the foot.
Well,
Yeah.
your answer made you a lot of friends in India. I'm sure about that.
Yeah.
Thank you for that. The Tourism Authority thanks you.
Yes.
Higher or lower of the next year? Just
Okay.
in your gut feeling. The Sensex,
Higher.
Nasdaq,
Higher.
Hang Seng,
Higher.
gold,
Higher.
Bitcoin.
I'm not going to comment on Bitcoin. I'll comment on crypto. Crypto is very volatile and too difficult to predict. Above my above my pay grade.
Great. Okay.
Yeah.
Oil
Oil will be higher.
and the dollar.
The dollar will be lower.
Well, you've done a really good rapid fire round. Nothing makes a man so adventurous as an empty pocket. Victor Hugo. Actually, Bill, your adventures and investment acumen have filled a lot of investors' pockets. Thank you for stopping by on Wizards and being a part of our show today.
Thank you, sir. Appreciate
It's been
it.
a great pleasure.
Thank you.
জলদি টিফিন প্যাক